How's it going, guys? My name is Ishan, and in this video we're going to be going over the new high-flying EV stock, Solo stock, and why it could actually be a $1 million maker with actual potential. But along with that, we also go over the very big risks associated with the stock and the company. And as always, a quick technical analysis at the end. So guys, if you appreciate these short and value-packed videos, make sure to drop a quick sub and let's clock in. Real quick, I want to congratulate any of the viewers who bought Appian stock way back when I called it the ultimate cloud stock to buy at $40 a share, because we just hit a new all-time high, baby. We hit 126 today and the stock has just been smashing it. I'll be making an update video on that soon, and along with that, SBE stock, which hit $26 today. I called it all the way back at $13 a share when no one was talking about it, and now the stock has been on an absolute tear. But now let's just do a quick overview of Solo stock, which alone has been up over 100% just this week. The actual company is actually called Electromechanica, and they're based in Vancouver, Canada. And to put it simply, they aren't your typical EV company in the sense of the type of car they make. Their first to market car will be a single seat, three-wheeled electric vehicle called the Solo, which retails at $18,500 with a 100-mile range. The cheapest Tesla Model 3 in comparison is about $30,000. So it's relatively cheap, but the trade-off is that it's only a one-seater. Then they also have the Tofino, which is an electric sports car starting at $50,000, which has decent stats. As you can tell, their customers are budget-conscious people looking for that EV experience. Like the Tofino is an electric sports car, but doesn't stack up even close to, say, Tesla's upcoming Roadster. Even in their investor presentations, one of the main points is the low cost of their car in comparison to their competitors. Lastly, they have a premium car called the E-Roadster, which is a two-seater and starts at $125,000 and is pretty interesting. It's electric but has a very vintage look and feel to it, which I haven't seen any other EV maker target. So that was a rough overview of the company, but now let's dig a little deeper and get into the nitty-gritty details about them, starting with the positives. So overall, as of October 2018, they have over 64,000 pre-orders, 23,000 for the Solo car and 41,000 for the Tofino, representing potential revenue of $2 billion, which is massive. But as we know, pre-orders mean nothing except for Nikola, which for some reason after all this drama is still a $10 billion company. But anyways, I digress. Pre-orders don't matter, especially if the company isn't even producing anything yet. However, apart from all the EV hype propelling Solo stock higher and higher, the company finally began production in China with their manufacturing partner Zhongshan Industrial Group, who is actually China's largest manufacturer of motorcycle and three-wheel vehicles and produces 2 million units plus annually across 130 models of two and three-wheeled motorcycles. And so they've kind of pulled a NIO over here. As we know, NIO has a partnership with Jack Motors, who does all the production for them, and so they're kind of doing the same thing by having this company in China do the production for them, which in the long term means no production costs for them. And I think it's a pretty smart thing, especially the fact that China is actually the largest market for compact cars. Globally, China's compact car market outranks every single other country by a long shot and is overall a huge market for EVs in general. They want 25% of all new vehicle sales to be electric just by 2025, and currently only about 5% of new vehicles sold are electric. So you're looking at a massive 5 times increase in sales in China just with EVs alone, and so that's why it's a huge opportunity for Electromechanica, and that's why I think that's another reason that they have a production facility in China. But interestingly, initial deliveries will only be made from the China factory to the US, not the China in general, just the US. And in the long term, they plan to deliver to China and Europe, but initial deliveries will be sent all the way to the US. And so by 2023, US small car sales are expected to be 232,000. And so even if the solo car could capture even 5% of the market, which represents about 11,600 cars, you're looking at 215 million in annual revenue for the company. So that is just absolutely massive. And that is just 5% of the US market. If they can capture even just 1% of the global market, where about 5.6 million small cars are sold annually, you're looking at 57,000 sales or just over $1 billion in revenue. So the opportunity is definitely there for a company like Solo if they can execute. And the company is also working on having a factory either in Nashville or Arizona, which will do the production for its US cars. The big thing I really like is that management is focused on targeting Western US. In an interview, their CEO Paul Rivera said that they aren't even focused on any other states, but just the key states in the West, such as California, Washington, and Oregon. And in fact, they plan to be launching 2 locations on the West Coast in Los Angeles, California, and Scottsdale, Arizona. California accounted for 50% of EV sales in the US in 2017, and in general there's a bigger adoption and incentives to adopt EVs in the West. 119 million North Americans commute using personal vehicles, and 105 million of them commute alone. And that's the market this company is going after. If pre-orders are anything to go by, I believe this is a company that will see a lot of traction when they actually begin delivering and launch. And overall, considering they have 0 long-term debt and 101 million in cash, that's a healthy balance sheet, which should help them build out their operations and scale marketing as they start deliveries into early 2021. So the market opportunity is there. This is a company starting production with $2+ billion in pre-orders, not to mention they've got the cash, 0 long-term debt, and the fact that EVs are just all the hype. And considering the market cap is only 800 million, this is a company that could 10 to 20x even from these current levels, and that's only if they can execute. And so now it's time to talk about probably one of the biggest things you should always be looking at when taking a look at a company to invest in, especially a speculative one, which is the risks. First of all, and probably one of the biggest which could be detrimental to their business short term, is the fact that their solo car doesn't even qualify for the California $7,500 tax credit because the car is a 3-wheeler, not a 4-wheeler, and therefore is classified as a motorcycle. Because of that, it may not do as well in California, where many other better EV cars qualify for the credit and get the cost of the car pretty low. However, I believe that this will only be a short-term problem because let's face it, these tax credits will be phased out eventually sooner or later. So that's why I believe this is only a short-term problem and shouldn't really affect them that much in the long run. But as they begin to launch in markets where they might not be able to qualify for these credits, that will definitely be detrimental to their sales. And this brings me to the second point, which is the price of their car. The price seems cheap, but honestly it really isn't. Considering no tax credits, and that is only a 1-seater, solo car with a price of $18,500 and Tofino of $50,000 are relatively expensive compared to the specs of the cars, especially when cost-conscious drivers have plenty of used cars on the market that are priced at $15,000 and lower, or even in general used EVs. And this was part of the problem why Mercedes-Benz's smart car failed. It was cheap, compact, but didn't work. Electromechanica CEO claims it was because the car didn't look good and appeal to the younger generation, but that's a reach in my opinion. So that's another reason why I believe they might fail. The car is cheap but too expensive at the same time for what they offer compared to competitors who qualify for this tax credits, and the fact that there are plenty of used EVs at the same price, this could be a big thing that negatively affects them. And we all know that the boy Elon Musk has always wanted cheap Tesla cars for the mass public, and the fact that he hinted at a potential compact car, if that does come to fruition, I believe Electromechanica will fail completely and no one will stand a chance, because at the end of the day, Tesla is the brand and they are at the top. So if they pulled out a compact car, this is a company that wouldn't even last. So overall, there are a lot of great things about the company and the stock, which I believe could end up making it $1 million maker. But at the same time, there are a lot of risks, and so it's highly speculative, and I wouldn't recommend you go all into a stock like this. Now for a quick technical analysis, it has been going parabolic and there's a lot of hype, so technicals probably won't matter at all. But anyways, if we do get a pullback, the $8.70 level will probably be an area we find support, and below that we still have a gap to fill at $7. As for a move higher, it's totally unpredictable, but with the momentum, $14 to $15 seems like the next stop. So there you have it, guys. Make sure you like and subscribe and let me know down below what you guys think about the company, if you plan to buy it or any other hype EV stocks you may be watching. Do all that good stuff and I'll see you guys next time. Take it easy, clocking out for now. Peace.